Hi and Assalamualaikum. This is Business Accounting, DPB 10033. Our group members are Humaira binti Azhar, 04 DPM 25 1034, Siti Umairah Safia binti Muhammad Zaki Zamani, 04 DPM 25 F 1038, Nur Shazza Ibtisam binti Rusli, 04 DPM 25 F 1086, and Nura Batisha Farhana binti Nur Hashimi, 04 DPM 25 F 1106. The objective of this presentation is to discuss the functions of regulatory bodies in Malaysia and also to discuss the importance of source document used in a business.
Here we have 6 regulatory bodies in Malaysia. First of all is Central Bank, second Securities Commission, third Company Commission of Malaysia, fourth Bursa Malaysia, fifth Suruhanjaya Komunikasi and Multimedia Malaysia, and sixth is KPDN.
First, regulatory bodies helps maintain stability. They make sure the financial system remains strong and steady, even during economic challenges. This prevents sudden crashes or crises that could harm the economy. Next, they protect the consumers and investors. This means ensuring that people's money and investment are safe and that their rights are protected from unfair or dishonest practices. Third, they ensure transparency. Regulators make sure that businesses provide clear and honest information to the public. This helps prevent fraud and build trust among consumers and investors. Then, they promote growth by supporting economic and market development. For example, they might create policies that attract investment or encourage a new business. Regulatory bodies also set rules and standards. They establish laws, guidelines, and ethical practice to make sure all organizations operate fairly and responsibly. Lastly, they monitor and enforce. This means supervising compliance with the rules and taking legal actions against those who break them. It's how they keep the system in check.
Here we're gonna talk about the importance of the source document used in the business. First of all is invoices. Invoices is a document issued by a seller to a buyer stating the details of goods or services sold, prices, and payment terms. The importance of invoice are proof of sale, basis for recording sales and purchases, and used for requesting payment. Second, purchase order. Purchase order is a document prepared by a buyer to order goods or services from a seller. The importance of purchase order is served as evidence of the buyer's intention to purchase and prevents disputes over orders.
Now moving on the second slide, we have delivery order and credit notes. A delivery order, also called a DO, is a document prepared by the seller to confirm that goods have been delivered to buyer. It's important because it acts as proof of delivery, meaning it shows that the buyer has received the goods. It also helps both sides to verify whether the correct items and the quantities were delivered. Next, the credit notes. A credit note is issued by the seller to the buyer to reduce the amount payable. For example, when goods are returned, damaged, or if the buyer was overcharged. This document is very useful because it helps adjust the accounts, reduce the buyer debts, and ensure fairness between both parties in the transaction. Next, let's look at the debit notes and official receipts. A debit note is a document issued by the buyer to inform the seller about debit adjustment, such as returning goods or correcting an uncharged amount. It's important because it acts as a request for a credit note and support corrections in the accounts records. Basically, the debit note helps the buyer communicate any change needed in transaction. Next, the official receipt. This is document issued by the seller to acknowledge payment received from the buyer. Its importance is that it serves as proof of payment and provides a clear record for both the buyer and the seller. This helps avoid confusion and ensure that every payment made is officially recorded.
Payment voucher. Payment voucher is a document prepared by the business when making payment, especially cash or check. Payment voucher important to internal control tools to authorize payment and avoid fraud. Memo is a short internal document used to record small transaction or give internal instruction. Memo is important to use as evidence of small adjustment and communication within the business. Check is a written order from a bank account holder to the bank, instructing payment to a specific person or organization. Check is important to secure method of payment and proof of money transfer. Other relevant document: statement of account to summary of transaction between buyer and seller, cash bill to proof of small cash sale.
We hope you learned something new about business accounts. That's all from us. Thank you for watching and have a nice day.